Okay, team, so let's go ahead and talk about the bear trap thesis that I had from early last week, right around here, right? So I want to go ahead and show you a couple of things here that are absolutely relevant to the current price action, right? So let's go ahead and just get that started now. What is up, you guys? Thank you so much for stopping by. Once again, this is ARCa coming at you with a VIRI technicals and raw price action thread of analysis on this first day of July, Saturday. You guys, welcome to July, and a very hot summer it is. I apologize for the sound that you're hearing in the background, as that's actually the studio AC unit that I actually had to kick out because it's extremely hot in here, right? So now it's actually feeling pretty good. So we will actually get this going now. So before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, team. So yes, we're looking at VIRI on the hourly time frame here. Okay, this whole thread here that I'm going to explain has to do a lot with the bear trap thesis that I spoke about a few days ago. If you have been following my videos, you know what I'm talking about. Okay, so this is a broadening descending wedge that I actually identified in our live stream, I believe on Friday or Thursday. Okay, so we got that breakout out of this very bullish formation, and now we're retracing to test the newly converted resistance into support, right? So usually that's that's just generally how this formation tends to play out. Now, per the playbook rules, this right up here is your take profit. Okay, I'm not saying we're going there. I'm just telling you that this is generally how it's played, right? But seeing that price action was recently within that threshold there just about a week ago, it's shouldn't be too much of an issue to actually get back up to that 190, right? So yeah, but anyway, just to actually show you a couple of things here, I'm not going to say that we're just going to bounce from this area here. In fact, I still see a downside. Okay, so that downside is actually particular to this here. You see this hourly gap? I do have a strong feeling that we may actually get this gap closure. I mean, it's already closed, right? But we're just using it again, right? So I'm going to show you this. Let me just go ahead and highlight it like this, right? Just so that we're aware of where exactly that is, right? So now if we actually bring back this channel, then you'll actually start to see the high relevance of it. Check it out. We have the wick all the way down to that area perfectly here. We have the opening of the closing of the candle perfectly to the top side of that gap, right? So heavy confluence here, right? And this candle here, right here, opening, right? This candle opening right here. This candle opening right here, of course, from the gap, right? So that brings a lot of relevance to that. Huge supports over here too, right? So yeah, I do think that the price action in the immediate short term can continue to the downside to about $1.35 before actually seeing some type of bounce here and rejecting from that downside, as this would be a true breakout. So we are following the golden rule of 3 here. So if we were actually, this would be a fake out here. We have test number 1, test number 2, test number 3, huge capitulation after that test number 3, but all of these are fake outs right here. And then we actually reaccumulated, and now we're on that test number 4 breakout. Okay, so this is good. We're testing now the validity of this test number 4. Next chart. Let's go ahead and get even more creative. Okay, team. So first of all, oh yeah, here you go. This is volatility versus momentum, indicating that there is a downside to be looked at, right? Not only that is that we are actually failing the SMA 14 on the RSI. The SMA 14 is represented by that pink line, right? And the RSI signal is this cyan line, or the baby blue line. Okay, so that's already failing that SMA 14. There could be a downside to continue here, to reload and then continue on to the upside. Okay, so now this chart, it's actually this chart here that's very, very curious to me. Okay, I actually have 2 very, very curious charts. First of all, we were talking about a potential test of the EMA 21, seeing that we're about to get this 3-day silver cross. We talked about a potential 122 drop before a bounce to the upside. Of course, it actually came down to about 114. I started wondering why. Like, why did it fail the EMA 21? So what I did was I actually just moved up one time frame here, and guess what? Take a look at this. 5-day EMA 21, perfect support right at it, right before a huge bounce to the upside, rejecting from the EMA 55 right up here. This is actually 2 moving averages that are starting to converge. We're starting to get some tighter and tighter price action within this. Okay, us breaking upside of the 5-day EMA 21, resisting from the EMA 55, and supporting and validating the support, and validating the support of the EMA 21 is a very good sign, and it is indicative of us trying to see if the validity of this the silver cross is happening on the 5-day. The 3-day would be the first one to experience that silver cross, very bullish there. And then the 5-day would be the one to cascade into. Okay, so that was something that I wanted to talk to you about real quick as to why the price action would have ended up at that 114 level instead of the 122 was very simple. It was actually the EMA 21 on the 5-day time frame. Okay, so now the next chart, another very exciting thing to look at here. Okay, so yes, we have the golden cross. We already talked about that. Huge push to the upside before a rejection. Come to test back down at the EMA 50, right? The SMA 50, of course. That's very normal. First of all, let me go ahead and get rid of the moving averages now, okay? And I want to talk to you about this, okay? Because there is a bearish formation, and this plays with a bear trap thesis, okay? So let's go ahead and show you this. Okay, so yes, what you're looking at here is, in fact, head and shoulders formation, right? Lots of people talk about these head and shoulders formations, so it's good to mention it here and there. They don't have the biggest hit rate because they are just a psychological formation. They don't have any mathematical properties or anything like that. So you know what? Whatever. We'll talk about it. It's all good. Okay, so this yellow line represents the neckline. Okay, so you have left shoulder, head, potential right shoulder already here. Okay, so that means that there is a downside objective to look at. You take that from the top side of the head, a trend line, right, to the very bottom of that, the center of the head, all the way to the neckline bottom here, and then you apply that to the right shoulder. Okay, so let's just say that we were to break down from here. This would be indicating a price of about 75 cents, 76 cents. Okay, but there is something that not everyone is looking at. So go ahead and take a look at this. Let me get rid of this arrow here. I just wanted to put a reminder there for myself. And I want to make sure that we actually see this red candle here. We want to make sure that yellow line always remains itself touching that red candle. This one right here. Okay, so let's move it up. So let's see. Yeah, okay, perfect. Now look at what's happening now. Okay, so we actually, we broke. What is that trend line in the first place? Well, if you remember correctly, it's actually this. It's our right-angled broadening wedge, right? So we broke outside of the wedge. We tested it one time, continued on to the upside, got a golden cross and a silver cross in that process. Then we're actually coming back to test the validity of our ascending wedge. So this is the test, the retest of that support from back here. Okay, so we tested it again and actually pushed to the upside from it one more time. Very impressive, okay? So that is something that not everyone is looking at. This is a serious reason as to why we could actually have a bear trap in play. So the bears are entering this here, thinking that they have their, or they're entering here, sorry. They're entering here, thinking that they have their head and shoulders locked in. But what they don't know is that we are testing a future EMA 21 versus 25 golden cross of two macro timeframes, 3-day and 5-day. We're also testing the support level of our newly converted resistance into support of this broadening descending wedge. We're testing the SMA 50 of the golden cross. I can pull it up. I mean, wherever that was, right? I have it somewhere, but the SMA 50 of the golden cross. We're testing that too, and we're rejecting from it. We're actually not succeeding the downside. There are too many factors to the upside that are not being considered by bear positions. So this is why I'm saying this is seriously a macro scale bear trap. And price action could actually be leading to an upside. Okay, so now let's go ahead and see what the downside looks like, because I did say we're looking for a temporary downside, right? And I spoke about this target being 135, around 135, right? So let's see if there's even a moving average down there that we can look at. Okay, no. Actually, there's the EMA 21 on the hourly suggesting a continuation to the downside because we're going to use it as a resistance. Okay, perfect. So let's go ahead and pull up the RSI real quick. All right, and here it is, 30-minute immediate short-term time frame, hourly right here, actually, suggesting a continuation to the downside, crossing beneath the SMA 14. Right now, let's go ahead and look at the 4-hour. Well, the 4-hour could be showing us that very support that we're looking at. Temporary downside, bounce from the SMA 14, continue on to the upside here. Another reason that we could be seeing that is 8-hour time frame also about to find support from the SMA 14. It's already starting to kind of curve here, right? Showing us the pivot to a potential upside. So this is another reason that we can actually see these two time frames are the very critical time frames that I'm seeing for a support before actually continuing to the upside. Now, if you take into consideration the 12-hour time frame that it has a bit of a resistance here at the SMA 14, we can only speculate from this point, right? So let's go ahead and bring up this, let's go ahead and bring this up one more time. So what I'm looking at here is the potential drop to this area here, and then the resistance that we're facing from that 12-hour could very much be the absolute opening of this candle here. So we're going to be looking at right where the SMA 10 and the SMA 50 are located in the hourly. This would actually mark a range of resistance for us, right? So just like this would be indicative, like the RSI is indicative of the downside first, then a resistance from this point right here at about 143, then the retest one more time and out and upwards and upwards. Onwards and upwards, right? So that's essentially what the RSI is telling me, okay? So now in respects to the weekly time frame, let me see the 3-day. 3 days still has an upside to go here. 5-day time frame about to make a bullish cross upside of the SMA 14. Yeah, that's essentially what I'm kind of reading from the charts right now. I must remind you to please remember that I am not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy or sell or hold actually any assets whatsoever. Okay, team, I need you to do your own due diligence and everything will be cool. But team, I think it was a pretty good analysis today that we can put this together for the coming week. Remember that we're going to be facing a short trading day on Monday. I believe that it's going to be closing at about 10 a.m. Pacific time, right? So make sure that you can line up your clocks for that. And we are going to be closed for trading on Tuesday. Okay, so the continuation of Tuesday would actually be on Wednesday, Thursday, and Friday. So very short week coming up. So we must kind of know that stuff. All right, team. So but this is a pretty good place to leave off. With that said, team, I wish you well a very, very good weekend and hopefully a long weekend for some of you out there, right? And I will catch you at the bell on Monday. Adios.